today's World Insight, the latest from Summer Davos in China's Tianjin municipality. As the world undergoes profound change, what is China doing to help stabilize and revitalize the global economy? And networks saving lives. Meet the people behind vital infrastructure networks and how they keep energy, water and communication channels flowing even in times of conflict and crisis.
Hello and welcome to World Insight with me, Tian. We're here in Tianjin, bringing you the latest on the annual meeting of the New Champions 2025 of the World Economic Forum. China is striving to develop itself into a supersized consumption powerhouse on a solid manufacturing foundation and is willing to do whatever it takes to help tackle the difficulties and challenges facing the global economy. That was said by the Chinese Premier Li Qiang when addressing the opening plenary of the 16th annual meeting of the New Champions on Wednesday. So how has the introduction of Chinese policies to promote the consumption brought new impetus to economic growth? And how will that translate into real actions and results? The session I moderated themed China's Economy Analysed, which was co-produced by CGTN and World Economic Forum, was joined by participants who shared their observations on the potential of the Chinese economy and its reality of consumption today. Take a look. How much enthusiasm of consumption is there among the Chinese consumers today? What are preventing them? What might be helping them? Joe, you are on the ground running on those issues every day. Tell me more, what is the reality today?
So I do think in the last couple of years, there has been a little bit of a management of expectations for Chinese consumers. And I think that has led to a little bit more of a muted confidence in terms of, do I spend for the future? Do I need to save more? Do I need to think a little bit around, how do I think about, my investments for the future? However, what we have seen in the last 1 year, I would say, is that a lot of people talk about, are we trading down? I don't think Chinese consumers are trading down. I think Chinese consumers are very savvy consumers, are trading for same quality for lower price. Okay, they are not sacrificing quality because they are actually in the Chinese competitive environment. There are plenty of substitutes, right? And actually, what you're seeing is a lot of mobility, right, and changes around the supply of what is out there. I think Chinese consumers have actually enjoyed higher quality of life, perhaps with same or cheaper prices. And that's where you see the numbers where, hey, are they trading down? And I wouldn't say trading down. I would say they're not sacrificing quality, but they're very savvy customers. Now that leads to, last point, is that in the competition, right, around companies, right, there is a ferocious competition going on right now because everyone's trying to figure out, like, in this large, group of customers that are all looking for substitutes, right? Value for money. The value for money segment is a segment that's been growing, and that growth is actually very, very inspiring. So I would say the Chinese consumer, they're not back to where they were, but they're changing, but they're still very, very robust.
Aswar?
This is a wonderful time for the Chinese economy with all these innovations potentially leading to greater productivity growth. And it is a scary time for Chinese citizens because, there is a prospect of much advancement in technology, interesting new jobs being created, entire new industries being created. But at the same time, the question is, where is the employment going to come from that offsets what happens with the declining industries? So if you think about this part of the economy that is very dynamic, certainly that creates a lot of potential for the future. But we are living in the present. It would be wonderful if AI, for instance, could solve the housing sector problems. That is something that weighs on the entire economy. It restrains consumption. So if you think about what needs to be done to create an enabling environment for this technology to work, there is a lot of hard work to be done. So what I think, again, is that the government should see this time of relative calm on the surface, as I mentioned, on the macroeconomic level, rather than just bracing for trouble that might come from the US or from elsewhere, to start thinking about the longer-term goals and what is necessary to accomplish them. And for that, I think some deeper-rooted structural reforms, which seem to have been taken off the table for now, really need to be brought back on the table. And with that, I think consumers might end up becoming much more confident, because I think right now, the brief surge in confidence that we have seen, thanks to the shift in narrative, might be difficult to sustain if you don't get the macroeconomics right. So technology is great, but you need macroeconomics to support it.
Ke Yu, also your thoughts.
We can talk about technological supremacy and AI and all this, but China is never going to be a rich country unless it becomes a big consumer country. And that's what we have seen the likes of South Korea, Japan be able to make that transition, right? Before we talk about consumption, we have to talk about jobs, right? We have to talk about social spending on healthcare, education.
And demographic changes too.
You know, if you look at the political economy of China, it's geared towards production. It's subsidizing production. It's all about technology, competitiveness, production. And by the way, I want to push back on the issue of how Chinese goods are so competitive and everyone's still importing Chinese goods. China's going to have a real problem, not just with the US, but with the rest of the world. Because it's no longer about just efficiency, it's about harmony. It's about giving other countries also an opportunity to be part of the global supply chain and everything, in every single sector. So China better raise its internal consumption and to harmonize these kind of relationships. But on that, I think there's a real shift, and we were going to discuss about the stimulus policies that is moving from supply-based more on demand-based. I think it will be fantastic if the yardstick competition on the local governments can put consumption as one of the measurements of success. I think that China is really transitioning from an old industry to a new industry, and that the stimulus needs to have a sustained effect, an endogenous effect that becomes a driver. And where are the opportunities? Well, first off, we talk about jobs. The jobs are in the services, but service sector only employs about 47% of the Chinese employment and only 50% of GDP. You got to open those up. The new generation, I totally agree with the fact they're all about consuming, they're all about leisure, about work-life balance, and they have created all these new entrepreneurial, innovative ways to consume and to develop the local economy rather than line up in the manufacturing factories, to develop that local sphere. So we got to give them the opportunity. And lastly, I think the opportunities are now in the second, third tier cities. We're seeing a massive wave of talent moving back to the local areas where there are actually more opportunities, whether it's in high-end manufacturing, local services, but this distribution creates this potentially endogenous momentum.
So if you think about, structural problems, you cannot solve them with macroeconomic policies, but macroeconomic policies can actually be a very useful lubricant. At this stage, monetary policy, I think, is not going to get much traction when the problem that you face is confidence, because household consumption did do relatively well recently, but it's not in a durable fashion. Investment overall has been doing well, but private investment is not doing very well. So I don't think cheaper money or more liquidity is the answer. But fiscal policy could play a useful role in bridging this gap between dealing with longer-term structural problems as well as boosting shorter-term growth. A few examples of that, if you think about using money to strengthen the social safety net, something that Professor Jin alluded to, improving center-provincial local fiscal relations because local government finances are very stressed right now, thinking about using money to reduce the corporate and personal tax burden. All of these are reforms that I think would really help in terms of moving the economy in the right direction, but would also have a good short-term growth boost. So I think the bridge between the short-term and the long-term could well lie through fiscal policy.
So how is that policy? We have seen over the past 2 years, combinations of policies come out from the Chinese policymakers from time to time. And it's been having some very positive impact. But how fundamentally this is likely to give the momentum to vitality of this economy, which everybody is aware of. There is tremendous vitality out there. How to fundamentally boost that and make sure people feel this confidence to work with China for longer term?
Consumption is the most big challenge for China today, and it has a great potential for the future Chinese economy. I think we have to understand it, so politically understand. So we need to put a lot of efforts and on the consumption, put the macro policy to support the consumption. I think this is the fundamental issue. The good news is I think the government realized that, put a lot of efforts in that now. Chinese household consumption accounts 39%, 39.4% today. Low, absolutely. There are many reasons I'm not going to explain, right? But it's a low. given the current geopolitical situation, given China want to move into a strong economy and a future high-income economy, China have to boost domestic consumptions. But Chinese consume material goods account for 32.2% of GDP already, which is not low, which is in line with international standards when you have a roughly $13,000 per capita GDP. As a human being, you consume for the material goods always have a limitation. So on the other way, it's a service sector. Yeah. It's almost unlimited area, right? So how can we open the service sector due to reform, let people to consume more service? I think that's the real challenge if we want to do consumption. On the demand side, I think the government is doing, as I mentioned, Kei mentioned a few things. Number one, if you're looking for this year's budget, it's roughly 1% of GDP on the social expenditures to put building a future and also today more solid social safety nets on the pensions, healthcare, Medicare, retirement things, make sure people feel safe, they can consume. The second macro policy is really on the job and income. The policy is to make sure the individual income growth levels in line with GDP ratios, and which is today. And in the rural areas, income level increase over GDP level now. I think that's good. So you have to have money, as Kei mentioned, job creation. This is really the top priority. This is all the jobs, so now try to get all the service sectors and also on the tech sectors to create a job. Now it's the number one task for everyone, create a job, expanding pools, and particularly for 10 million fresh graduates from college in the coming month. I think this is a lot of policy in place. On supply side, it's really important to do a reform in service sector. We don't consume very much healthcare. We don't consume very much on education. And Chinese people pay a lot of attention on education, right? We don't consume on entertaining, on tourists. So all those things have a huge potentials. But we need to get the price right. We need to get the regulatory framework right. We need to get the market, the business environment right, so private companies and the companies can move in to compete with each other. And also the foreign company can move in to compete with each other.
I think China moved from being in the industry side a capacity leader to capacity and innovation and digital leader. What does it take to fix that is to address the ugly balance sheet. Indeed, you're right, the returns are lower, expectations are lower than what we are asked for, double-digit return on capital employed for foreign companies, listed companies in Europe and the US. So, and China will do it by addressing the overcapacity, and obviously domestic resilience consumption will help. And I love the harmony word, I love it, actually I'm gonna steal it from you. It has to happen in harmony with other regions, because at one point of time, it's not even the US stopping import through tariff shocks. Yeah. Europe is gonna also build some barriers at one point of time. So we need that resiliency of domestic
not only
consumption.
The developed economy, but also the global south as well.
Yeah,
how
absolutely.
To
and the global south, and build good neighbors, stable neighbors. I'm African born, I grew up in Morocco. Africa is the last emerging continent available to us. China is investing in Africa. You need to do it the right way from A to Z, onshoring, profitable value chain. Number two, real estate, I think it was mentioned. Number three, decline in demographics with unemployment, where you need to recreate new jobs. But in industry, we need reskilling and upskilling, because the way we manufacture is very different. So don't forget that the industry needs these re-education, upskilling and reskilling. And that's the new creation of jobs.